So let me describe how the pension module works. So you open it here in apps B. Okay, first of all, the way you enter the information is, for each employee, you need to indicate the pension scheme that he's contributing to, and then you'll say when these contributions are supposed to be done, so period 1, period 2, and then you need to indicate for the employee and for the organization, and you can also put in opening balances. I'll leave that opening balances for another day. So in this case, we're going to look at 3 people: Alan Todd, Alexis Norman, and Alison Maddox. So for each of them, they have an employee contribution of 5% and an organization contribution of 6%. I think it's the same for all of them. Okay. So the way these entries go into the payslip. So let's just leave that open. We go to payslips, and we're going to look at the actual payslip so you can see how the entries go in. Now, the way the information is processed depends on what you indicate should happen for the specific institution that has been selected. So if we open the institutions, we have these 3: Britam, Jubilee, and KCB. Now, this is purely for demonstration purposes, so it may not necessarily be correct to say whether it's unregistered or not, but just for the example, just accept it. So we are saying KCB is an unregistered scheme, Jubilee and Britam are both registered, and then we are saying that the organization contribution is a benefit on the employee for Jubilee and KCB. What does that mean? In the case of non-taxable or tax-exempt organizations, the organization's contribution is taxable as a benefit on the employee. It's taxable in full if the pension scheme is unregistered, and only the excess portion if the pension scheme is registered. Excess means the amount above the lower of 30% of pensionable income or the defined limit. Now you also indicate what income the pension is on here. So in our case, we are saying it's on fixed pay. The options is either on basic pay or fixed pay. Okay, given that setting, so we've done the processing and the payslips have come out. So we'll look at one payslip at a time. So we're looking at KCB first, right? So let's see. In this case, you have number 26, pension non-tax deductible, KCB pension scheme, unregistered. In this case, this is not going to be tax allowed, so there won't be any entry in the allowed portion of the payslip. It's unregistered, and we indicated that the employer's contribution should be posted as a benefit to the employee. So the employer's contribution is showing down here in number 34, 4413.28, and that goes in as a pension benefit in the benefits section under number 7. And you can see it's added to total benefits. So it increases the taxable pay. And there is no allowed portion. So we go to the next one. In this case, the pension scheme is tax deductible. So you have the employee's contribution, and then you have the employer's contribution in number 31. Employees is number 22. And when we go up, we'll find that pension tax relief is sitting here for the employee's portion of the employee's contribution is tax allowable. So it increases tax allowed, which reduces taxable pay. And there's no benefit on this one. So the last possibility is, in this case, you have number 26 here. The pension is tax deductible. The contribution from the organization is a benefit. We come up here and we can find under 5, the pension benefit is 14,017. So it's the 34,000 that the employer is contributing minus 20,000, because 30% of gross pay will be more than 20,000. So the portion that's taxable is 14,017, and you can see it adds to benefits. So it increases taxable pay. So those are the 3 possibilities. There is one further possibility where I guess you can be unregistered and the benefit should not be taken into account, in which case you would only have the the two entries, the employee's contribution and the organization's contribution, and nothing else. There would be no allowed portion and there would be no benefit.